If you are a Canadian senior, there's one bill I want you to check before you make your next payment, because you may be paying more than necessary without realizing that you could qualify for help. And no, I'm not talking about some secret new rule where seniors can simply stop paying their bills. The bill I want you to look at is your property tax or housing-related bill. For many seniors, especially homeowners living on a fixed retirement income, property tax can quietly take thousands of dollars out of the budget every year. But depending on where you live, your age, your income, and whether you own or rent your principal residence, there may be credits, grants, rebates, or other programs that can reduce the overall burden. So before your next payment goes out, take a few minutes to check what you may actually qualify for. The first thing you need to understand is that there is no single Canada-wide senior property tax program that automatically gives every senior money. These programs are often provincial or municipal, and the rules can be very different depending on where you live. That's why I don't want you to hear a headline like, "Seniors can stop paying property tax," and believe it. That is not how the system works. What you should do instead is check whether your province has a senior homeowners grant, property tax credit, tax deferral program, or another form of assistance. The Government of Canada also provides a benefits finder that can help Canadians identify federal and provincial or territorial benefits they may be eligible for. Let's take Ontario as an example because it has a specific program that many senior homeowners should know about. The Ontario Senior Homeowners Property Tax Grant, or OSHPTG. The CRA explains that this grant is available to eligible Ontario senior homeowners with low to moderate incomes, and the maximum 2026 grant is $500. The amount you actually receive depends on factors including eligible property tax paid, income, and marital status. That means if you are an eligible Ontario senior homeowner and you are paying property tax, you should not simply assume that the full amount on your municipal bill is the end of the story. For the 2026 Ontario grant, you generally needed to be at least 64 years old on December 31st, 2025, be an Ontario resident on that date, and own and occupy a principal residence for which you or someone on your behalf paid property tax for 2025. You also need to file your 2025 income tax and benefit return and complete the relevant application section. So if you are watching this and thinking, "I'm already 65, but I've never heard of this," don't panic. The important step is to check whether you already claimed it and whether you received the corresponding payment after your tax return was assessed. And here's something very important. The grant is not necessarily $500 for everyone. For 2026, the maximum is the lesser of $500 and the eligible property tax paid for 2025. For a single, separated, divorced, or widowed applicant, the grant is reduced when adjusted net income goes above $35,000 and is unavailable at $50,000 or more. For married or common law applicants, the income thresholds are higher, with the grant reduced above $45,000 and unavailable at $60,000 or more. This is exactly why you should check your own numbers rather than assuming that someone else's benefit amount will be the same as yours. But the property tax grant isn't the only thing Ontario seniors should check. There's also the Ontario Energy and Property Tax Credit, or OEPTC, which is part of the Ontario Trillium benefit. This program is designed to help eligible low and moderate income Ontario residents with energy costs and property taxes. The CRA says the 2026 OTB payments are generally issued monthly from July 2026 through June 2027, although smaller annual entitlements may be paid as a lump sum. This creates an important connection with the bill sitting on your kitchen table. If you are paying property tax, your property tax expense can potentially be relevant when determining eligibility for certain credits. The 2026 OEPTC is based on information from your 2025 tax return, and eligible applicants need to complete the appropriate sections of Form N-Ben. So before you simply write another check to your municipality and forget about the bill, make sure your tax return included the information needed for any credits or grants you may qualify for. Now here's a mistake I see seniors making all the time. They receive a property tax bill, pay it, and throw the paperwork into a drawer. Months later, they forget exactly how much they paid. Then tax season arrives, and they can't find the statement. Don't do that. Keep your property tax bills, payment confirmations, and other housing documents together. Your records can be important when you're applying for a provincial credit or grant, or completing your tax return. And if you rent rather than own your home, don't automatically skip this section. Some provincial programs are designed for renters as well as homeowners. In Ontario, for example, the OEPTC can apply to eligible residents who paid rent for their principal residence, subject to the program's rules. So the question isn't simply, do you own a house? The better question is, what housing costs did I pay, and what programs are available in my province? Now let's talk about something that could be even more valuable for some seniors, property tax deferral or tax relief programs. Depending on your province or municipality, There may be programs that allow eligible seniors to delay some property tax payments or receive other forms of relief. But this is very important. Deferring a tax payment is not the same thing as getting the tax permanently canceled. A deferral can mean the amount is postponed and may eventually have to be repaid, sometimes with interest or through the sale or transfer of the property. So if you see an advertisement saying seniors don't have to pay property tax, read the actual government rules before doing anything. The reason I'm emphasizing this is because retirement planning is not only about how much money you receive. It's also about how much money you have left after your regular expenses. If your property tax is several $1,000s a year, even a legitimate credit or grant can make a meaningful difference to your cash flow. But you need to understand whether the program gives you a direct payment, reduces your tax burden, provides a credit through your tax return, or simply allows you to delay payment. Now, let's imagine a Canadian senior named Margaret. Margaret is 70, owns her home, receives OAS and CPP, and has a modest retirement income. Every year, she pays her property tax bill on time. She has never checked whether there is a senior property tax program because she assumes that government benefits are only for people with extremely low incomes. One day, she checks her provincial government website and discovers that she may qualify for a senior homeowner's grant. She files the necessary information and receives assistance. The important point isn't that every senior will have the same result. The point is that Margaret would never have known unless she checked. And this is exactly what I want you to do before your next payment. Don't just look at the amount at the bottom of the bill. Look at the programs connected to the bill. If you're in Ontario, start by checking whether you applied for the 2026 Ontario Senior Homeowners Property Tax Grant and the Ontario Energy and Property Tax Credit on your 2025 tax return. The CRA says the same spouse or common law partner generally needs to apply for the relevant credits for a couple, and the appropriate form on Ben must be completed. If you already filed your return, check your Notice of Assessment and CRA account to see what you were assessed for. There's another useful detail for Ontario seniors. If you already received the Ontario Trillium benefit, the 2026 payments generally began in July. The CRA says monthly OTB payments are normally issued on the 10th of the month, although there are exceptions depending on circumstances and assessment timing. So if you expected a payment and don't see it, don't immediately assume you're no longer eligible. Check your CRA information and make sure your tax return has been assessed. Now, what if you're not in Ontario? This is where you need to pay attention because your province matters enormously. British Columbia, Alberta, Saskatchewan, Manitoba, Quebec, New Brunswick, Nova Scotia, Prince Edward Island, Newfoundland and Labrador, and the territories can have different programs and rules. Some assistance may come from the provincial government, some from a municipality, and some through the tax system. So don't search only for Canada Senior Property Tax Grant. Search for your province, plus Senior Property Tax Credit or Rebate, and always use the official government website. You can also use the Government of Canada's Benefits Finder to explore available programs. It asks questions about your circumstances and helps identify benefits and programs you may want to investigate. This is much safer than clicking on a random social media advertisement promising thousands of dollars. Now, here's another important point. Filing your taxes can affect access to benefits. Even if you don't owe much or any income tax, your tax return can be used to determine eligibility for income-tested credits and benefits. Ontario's 2026 property tax-related programs, for example, use information from your 2025 income tax and benefit return. So if you haven't filed your return, don't assume that there's nothing to gain from doing so. And if you are a senior who recently became widowed, separated, or changed your marital status, pay particular attention. Your eligibility for certain credits and programs can depend on marital status and family income. In Ontario, for example, the 2026 OAPTC calculation uses marital status as of December 31st, 2025. A major change in your household situation can therefore be a reason to review your benefit information rather than simply continuing with the same assumptions. Now, let's come back to the title of this video. Check this one bill before your next payment. You could save money. The reason I chose the property tax bill is simple. It's one of those expenses that can be large, predictable, and easy to overlook. You know you have to pay it, so you pay it. But paying a bill doesn't mean you shouldn't check whether you are entitled to assistance connected to that expense. And there's another benefit to doing this review before your next payment. It gives you time to correct mistakes. Maybe your property tax information wasn't included correctly on your tax return. Maybe you never completed the provincial form. Maybe your income has changed. Maybe you moved. Maybe you're now living in a different type of residence. Or maybe you simply never knew the program existed. The earlier you identify a problem, the easier it can be to investigate. But please don't make the opposite mistake and stop paying your property taxes just because you think you qualify for a grant or credit. Until a government or municipal authority confirms that you have an approved reduction, rebate, deferral, or other arrangement, Continue following your normal payment obligations. A YouTube video is not a replacement for an official approval notice. If your bill is due soon and you're struggling to pay it, contact your municipality or provincial program office directly and ask what assistance or payment arrangements may be available. Don't ignore the bill hoping it will disappear. And seniors should also watch out for scams. A legitimate government program should have clear eligibility requirements and an official application process. Be suspicious if someone tells you that you have been pre-approved for thousands of dollars, but must first pay a processing fee. Never give an unexpected caller your banking password, PIN, one-time security code, or government account login. Go directly to the official government website instead. So here is your simple action plan. Take your latest property tax bill and look at the amount, the property address, and the payment dates. Then gather your most recent tax return and notice of assessment. If you own your home, check your province for senior homeowner grants, rebates, credits, and deferral programs. If you rent, check whether your province has credits that recognize rent or housing costs. Then use the Government of Canada's Benefits Finder to identify additional programs. Finally, check your CRA account to see whether you are already receiving a relevant benefit or credit. If you're in Ontario, specifically investigate the 2026 Ontario Senior Homeowners Property Tax Grant and the Ontario Energy and Property Tax Credit. The 2026 OSHPTG maximum is $500 for eligible applicants, while the actual amount depends on income, marital status, and eligible property tax paid. The OEPTC can also provide support for eligible low and moderate income Ontario residents, and the 2026 entitlement is generally paid through the Ontario Trillium benefit. And if you are in Northern Ontario, there is another program worth checking, the Northern Ontario Energy Credit. Eligibility depends on factors, including where you lived on December 31st, 2025, and whether you paid eligible rent, property tax, or certain home energy costs. Again, this is not automatic for everyone, so check the official rules. The biggest lesson is this: don't confuse paying a bill with paying the full financial cost of that bill. There may be credits, grants, rebates, or assistance that change the amount you ultimately carry as a retirement expense, but you have to check. For seniors living on OAS, CPP, GIS, pensions, savings, or a combination of these, every dollar matters. Saving $20 a month might not sound dramatic, but saving a few $100s a year can help with groceries, medication, transportation, utilities, or simply give you a little more breathing room. So before your next property tax payment goes out, don't just open the envelope, look at the number, and put it back in the drawer. Check the bill. Check your tax return. Check your province's senior programs. Check your CRA account, and verify what you're actually eligible for. You may discover that nothing changes, and that's okay. At least you'll know. But if you discover a credit or grant that you were eligible for and never claimed, that could be money you were leaving behind simply because you didn't know where to look. And remember, the goal isn't to avoid paying legitimate taxes. The goal is to make sure you are not paying more than you are required to pay after applying the benefits and credits you legitimately qualify for. Your retirement money took decades to build. Before you send your next big payment, take a few minutes to make sure you understand every available option. Check the bill, check the benefit, check the rules, then pay what you actually owe.